Ladies and gentlemen, Greg McCloskey with the Forex Quick Look. Going to take a look at the Aussie versus US dollar. Today's date is July 1st, 2024. Let's get started. Just focus on the technicals. I talked before my vacation of this swing area right through here where most of the price action is taking place in the Aussie versus US dollar. And lo and behold, last week's trading, the price high did come to the high price of that swing area near the 0.66896 level, found willing sellers, and but largely lots of ups and downs in last week. It's trading it ended the week near the highs and also near the high of this swing area. And trading here today, what do? We went up to the other high price that we saw from last week, and also the high of the swing area near 0.66896, and once again found willing sellers and have since pushed down lower. So we averted breaking to the upside and extending outside of this value area that's controlled the Aussie versus US dollar going back to May and April, back through here, and started its rotation back to the downside with the dollar buying and trading here today. Dollar buying is being propelled by higher interest rates in the U.S. The 10-year yield is currently trading 13 basis points, and that is having an impact on the U.S. dollar, of course. And the price low in the Aussie versus U.S. dollar has now pushed down toward these two moving averages, which sit within the middle of this big red box. These two moving averages are the 200 bar moving average on the 4-hour chart that comes in at 0.66459, and the 100 bar moving average on the 4-hour chart at 0.66395. We're currently trading just above those levels after dipping in between those levels, as you can see. If you squint down and look very closely. So this midpoint level is acting as support, at least in the short term intraday, for the Aussie versus US dollar. We'll take a break below the 0.66395 level, the lower of those two moving averages, to increase the bearish bias and have the traders thinking in terms of the lower end of the extreme. That lower of the end of the extreme was the low price, not last week, but the week before and the week before that, between the 0.6675 level and 0.66832 level. And if the price were to dip below these two levels, that would be certainly the another target area for traders to think and look toward going forward. But for the time being, the midpoint, near the midpoint, I guess, and the two moving averages are trying to hold support near the 0.6640 level. So that's my technical look at the Aussie versus US dollar. Averted breaking outside of the red box, but trying to hold support against the two moving averages, the two 4-hour moving averages. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.